Hey, what's going on, everybody? Today I'm going to show you 5 things you can do when the stock market is down. What's going on? My name is Mallory Voti with financiallypresent.com, your place for finance and investment education. And today we're going to go over the 5 things you can do when the stock market is down. There are so many reasons why you see the ups and downs, but you have to remember we are in a market. The stock market is one, the economy is another, and the real estate is another, but they all move in cycles. That means up and down all the time. Whether you're in or not is a different discussion. The ups and downs of the stock market are completely normal, and it allows people opportunities to get in and out. In fact, you have to remember it's constantly a revolving door. People are entering and exiting the market based on their personal situation at any given time, and some people are entering or leaving the market based off of the market situation itself, so when it's up or when it's down. When there are some significantly down days, you have to take a step back and look at all 11 sectors and see how they're performing. And generally, if they're down, that means that you have a lot of movement for some particular reason. If you need to learn more about the 11 sectors, please check my other video out that details how the 11 sectors are broken down. When the stock market is up, everything is fine to everyone. But when the market goes down, people always ask, what should I do? What should I do? Here are 5 things you can do. Number 1, do nothing. Yes. In fact, you do not have to do anything when the stock market is down. Some people realize that this is very normal and they know that they cannot control the stock market, but what they can control are their own actions. So they decide to do nothing. That means they're not going to increase their risk. They're not going to decrease their risk. They are going to ride this out because they understand that, hey, in the long term or in the grand scheme, them making short-term decisions may not benefit them. So it is perfectly normal to do nothing during this time. Number 2, you could keep investing in your 401k. This is something that is very, very consistent for you because it's regularly investing in the stock market in a diverse mutual fund, most likely, without consideration of the current events or any feelings or any emotion. Investing in your 401k is one of the most disciplined behaviors you can do. Number 3, you can buy the stock you've been waiting for. Yes, now is the opportunity. If the market is down, technically it's a sale. There are stocks that you've been waiting for that are on clearance right now. You know their products, you know how the culture of the company works, you trust their values, you really want these companies, and this is your opportunity. It allows you to get the shares at a price lower and knowing that you would be willing to hold the shares even if it went down more. Of course, it is important to do your research if you are going to continue buying in a down market. Now, before I mention the last 2 things, I want you to take a moment to hit that like button, subscribe, and turn on notifications so you don't miss out on future videos. Number 4, you could sit on the sidelines. Some people are waiting, but they don't know what they're waiting for, and they're too nervous to jump into the stock market. And if you were to just now start investing and you're not conditioned to deal with the ups and the downs of the market, jumping in right now may not be suitable for you. I don't quite like the idea of sitting on the sidelines because you don't get any benefit from the market. But depending on your personality, this may be the best option for you. Just sit back and just wait until you are comfortable, because a down market is not necessarily something that comes naturally comfortable to anyone. Number 5, you can decide to double down on index funds. Yes, double down on index funds, because if the market is down, this is your opportunity to get something on sale. The S&P 500 is one of the most diverse representations of 500 large companies in the world. And that is one of the best ways to take advantage of the entire market being down. And you can also look at sector funds as well. But ultimately, you want to pay attention to the expense ratios as well, because that is where you can decide to really increase or decrease your costs when it comes to investing. No matter what you decide to do with these 5 tips, just remember that there's always risk in the stock market and you have to do your research. If you found value in this video, go ahead and hit that like button, subscribe, and turn on notifications so you don't miss out on future videos. And until next time, stay present.